Hey there, in this video I want to talk to you about the difference between what is my minimum monthly income and what is my average monthly income. This is really important to understand when it comes to budgeting, and in Grandma's Jars, if you're using the app, you'll actually notice that we do have on the position summary page, this is your minimum monthly income and this is your average monthly income. So I want to use a really simple example to explain it today. The minimum monthly income really only applies to people that get paid weekly or fortnightly. So if you get paid weekly, you will know that every 3 months you have a 5-pay month. So that means you'll have, and so if we use this example, it's probably the easiest way to explain it. We've got this example here where we have $100 a week we get paid. So on a 4-pay week, we get $400. But then every 3 months, we have a 5-pay week where we get $500. The minimum monthly pay is quite simply, what do I get in a 4-pay month? So I know that is what I'm going to get, worst case scenario, every single month. I know I'm going to get at least $400. And then, every 3 months, I get $500. If you're fortnightly, what actually happens is that you have 5 months in a row where you get 2 fortnightly pays in a month, and then when you have, or every 6 months, you'll then have 3-pay months. So often we're hanging out for those 3-pay months, going, woohoo, 3-pay months, but unfortunately most people already have that money allocated to expenses, so they don't really get to enjoy it. Where possible, what we encourage is people to live off their minimum monthly income. So if you get paid $400 a week, set your budget to, if you get paid $400 a month, set your budget to $400 a month. And that way, when we come to the 5-pay months, that extra $100 you get is purely surplus. I'm hoping that makes sense. Now, your average monthly income, of course, is then when we factor in the 5-pay months throughout the year. So for instance, in this case, when we earn $100 a week, it's like saying, okay, $100 times it by 52 and divide it by 12, and our average income is actually $433 a month. So that is what you know you will get across a year, but because it occurs in bumps, it can be a hard figure to budget to. So this is where, again, I come back to, where possible, budget to your minimum monthly income, which is 2 fortnights per month or 4 weeks pay per month. And then when those extra pays come in, so every 3 months, you get an extra pay if you're getting paid weekly, and every 6 months you get an extra pay if you get paid fortnightly. If you can budget to the minimum monthly income when those extra pays come in, they are purely surplus. Money over and above what you need for your savings. You can take that money, you can use it to pay down debt, you can use it to build savings. It's basically a forced savings. So there's the difference between minimum and average monthly. You'll come across it throughout Grandma's Jars. It's really powerful if you can learn to live off your minimum monthly income. Now, if you are interested in saving money, if you're interested in spending less, if you're interested in breaking the paycheck cycle or paying off debt or achieving lifestyle goals that are really important to you, can I encourage you to subscribe to this YouTube channel? Every Tuesday and Thursday, we will release videos about managing your personal finances. So please, subscribe below, and I look forward to seeing you in the next video.